Ladies and gentlemen, I am back. So this is a volume profile indicator. As you can see here, we have volume bars showing different volume levels at different price levels. If you've traded with volume profiles before, you would know that the longest volume bar, like this one, usually indicates the point of control, aka the PoC, a price zone with the highest concentration of either buy or sell volume within a specified lookback period. Right now, the indicator tells us that this is where we had the highest concentration of buy volume, which corresponds to this Bitcoin price. We have the highest concentration of buy orders over the last 200 candles. If price retests this level, I'm going to take a buy position. This is good confluence because this zone not only has the largest buy volume, but it's also both a support level here and a resistance level here. You know, the previous resistance turned support. I'm going to combine these three aspects into one. You know, the previous resistance, the current support, and the indication of highest concentration of buy orders, so I can anticipate how price is going to react to this level during a retest. As you can see, price is coming down, it's not there yet, and then it touches our zone and prints an engulfing candle. This is a solid sign that price might continue going up. If I were to take a long position here, you can see the trade would have been profitable. Now, for the opposite case, our volume profile shows that at this price level, we had the highest concentration of sell orders. You can even see the exact price. Now, if price gets back to this level, it's likely going to go down. Here, we also have previous support turned resistance. So again, three aspects. I capture the previous support, merge it with the current resistance, and add the PoC line showing the highest sell volume like this. When the price retests and shows bearish continuation with a clean engulfing candle, I'm going to take a short position. Now, a few hours later, price taps the level, reject, and prints the engulfing candle. We take a short position. And as you can see, after some time, the trade is profitable with a 1 to 1.5 risk-reward ratio. Ladies and gentlemen, this is a video about the most powerful and unique volume profile indicators I've seen on TradingView. We're going to cover what this indicator is, the best settings to use, and I'm even going to show an example strategy optimized for profitability. If you find value in this video, remember to leave a like, and even better, consider subscribing to stay tuned. Let's get into it. To get started with this indicator, you first of all want to go to TradingView, the platform I'm going to be using here. If you haven't signed up yet, there's going to be a link in the video description for you to do that. And then you want to open any trading security that you like in any time frame. For me, I'm going to be using the 1 hour time frame of BTC USD. Next, click on indicators and type in Quadro Volume Profile, and then you want to select this one by Big Beluga. Once you've added it, this is how it's going to look. The Quadro Volume Profile is a precision engineered volume profile tool that segments market volume activity into 4 distinct quadrants around the current price. By separating bullish and bearish volume above and below the current price, it helps you to quickly identify dominant forces in the market and high interest price zones. Now, let's take a look at its physical components. This green horizontal line basically represents the current price of whatever market that you're using. And this white vertical line separates buy volume from sell volume. The current price line is also a separator. It splits the volume above price from the volume below the price. Together, these two lines create 4 volume quadrants around the current price, hence why the indicator is called Quadro Volume Profile. Now, to the bars. They're divided into 4 for a reason. Starting at the top, the upper left shows the sell quad above price, basically bearish volume above the current price. And then the upper right shows the buy quad above price, meaning bullish volume above the current price. Below the price, we have the lower left, which is the buy quad below the price, basically meaning bullish volume below the current price. And then lower right is the sell quad, which basically is the bearish volume below the current price. Each quadrant carries a live label, so you don't have to guess. Red means sell, green means buy. The label also shows the total volume inside that quadrant and its percentage share of all volume and trading activity. When you add these 4 percentages, you get 100%. That matters because when you're trading, you want to have your setups happening in the highest interest zones. You'll also notice dotted lines called points of control or PoC. A PoC marks the price zone with the highest volume in that quadrant. Up at the top, the green POC comes from the longest buy bar above the current price, and the red POC line comes from the longest sell bar above the current price. Now, down below, it's the same idea for their buy and sell quadrants. If you want to track the exact level, you drop a horizontal line on that bar like this and extend it to the right so you can track it. A buy side POC near a support level often becomes a level to watch for long positions, while a sell side POC near a resistance level can indicate areas to watch for short positions. I know you may be thinking, but why 4 quadrants instead of a typical single-sided profile? Well, by splitting bullish and bearish volume both above and below the current price, this indicator makes it easier to read where market interest truly clusters. Now, with the default look back of 200 candles, you can read at a glance the distribution of sell and buy volume above price and the distribution below the price. If you want to spot the single highest concentration, you just find the longest bar in that relevant area and use its POC. It's clean, clutter-free, and it's going to make execution even simpler. Now, let's take a look at the settings so we can see how customizable this indicator can actually be. On the inputs tab, we have the calculation period with a default value of 200. This defines the range for volume analysis. Basically, how many historical candles the indicator is going to use to calculate the price volume. I'm not going to change this value. Next, we have the bins. This controls the resolution of the volume distribution and how the volume is stacked horizontally. Fewer bins means each volume bar is going to be thicker, covering more price points. Now, with volume, as you may know, we usually don't want to target a single price point like 100,000. We treat it as a zone, the same way you would draw a support or resistance area with a thick horizontal region that spans multiple prices. The smaller the number here, the more price points it's going to cover, which, at least for me, makes the analysis more useful. But don't go too low. Now, if you increase the number, the volume bars get thinner and thinner, covering fewer and fewer price points per bar, which isn't ideal for me. I'm going to reduce this to 35. And then we have the offset, which basically is the number of candles that the volume profile should be pushed forward. The default is fine, but for this strategy, I'm going to set it to 75. And then here we have toggles. This side toggles the different quads. Click the upper sell and the upper sell quad disappears. Click the upper buy and the upper buy quad disappears. And so on down the list. The other side toggles the POCs mapped to their specific quadrants. For example, for the upper sell quad, if I don't want to keep its POC on a chart, I just uncheck it and it disappears. Same idea for the rest. You can change the colors here as well. The calculated bars value limits the initial calculation of the script to the last number of the bars specified. This can improve loading time on a slow computer. Reduce the number if needed. If you have a fast computer, you can leave it at 500 or even set it to 0 so the script executes on all available bars of your trading security. The style tab has several options that we can toggle on or off. If you have any changes for yourself, you can make them. I've made my changes, so once you're done, click OK so we can move on to how we can use this indicator to trade. Now, to trade with this strategy, we also need to add an indicator to identify the market trend, just in case it becomes subjective or tough to rely on trend lines alone. To add our trend indicator, you want to go to the indicator search tab and type in variable index dynamic average, this one by Big Beluga. Once added, you want to double click on it to open the settings. On the inputs tab, you want to change the VIDYA length to 50, and then under color, disable the shadow. In the style tab, you're going to disable every option except the first plot option, and then make the plotted line thicker. Once you've done that, click OK. This is the Volumatic Variable Index Dynamic Average, usually abbreviated as VIDYA, and it's going to be our trend identification tool. We want to trade only in the direction of the trend. When the trend line is green with the price trading above it, that is a bullish trend, and we're going to be looking to take only long positions. If it turns red with the price below it, that's bearish, and I'm going to look only for short positions. So how do we take a long position? Well, condition number 1 is you want to ensure the trend is bullish as identified by the VIDYA indicator. The trend line is green and the price is above it. Condition number 2 is you want to have a lower buy quad POC printed near or at a previous major support level. Now, looking at the chart, we have 2 horizontal lines, a red line above the current price and a green line below the current price. Now, this green one is our POC from the lower buy quadrant. So this line is the one that should be exactly at or near the most recent major support. And what is our major support level? It's this one right here. Now, I'm going to track that zone forward with a clean rectangle so we can watch how price behaves. For extra confluence, look at the percentage values. Since we're using buy volume as our confluence, we want the buy quadrant percentage to be higher than that of the sell quadrant percentage. As you can see, the buy percentage is actually higher than the sell. So now we just let the market do its thing. Price comes down, touches our zone, and then we wait for signs of bullish continuation, like an engulfing candle. And this is a beautiful engulfing candle, which means we're going to take a long position here, put the stop loss comfortably under the zone that we drew, and set the take profit at 1.5 times your risk. Let the trade run. And as you can see, the trade was profitable. Now, for a short position, we're going to do the opposite. Condition number 1, identify the trend is bearish. So we're looking for a red VIDYA trend line like this with the price trading below it. Condition number 2, find a red dotted POC above the current price that represents the highest selling volume over the last 200 candles. Once you have that POC, you want to make sure it's printed at or near a previous major resistance. This is our major resistance. And this is the POC. Remember, it doesn't have to touch it. As long as it's close enough to it, then it's good. Now, for this trade, we even had a bonus confluence because, as you can see, close to this resistance, we also had a prior support. I'm going to track the level from left to right with a rectangle so I can watch what price does on the retest. Since we're going to be selling, we also want to confirm that the upper sell volume is dominant. Check the volume percentages and make sure the sell is greater than the buy volume, which, as you can see, is the case here. After a few hours, price finally retests our resistance level that's backed by volume. A great double confluence. Now, I'm going to look for signs of bearish continuation, ideally an engulfing candle. Here we got a nice rejection and a clean engulfing candle. I'm going to take a short position, stop loss above our level, the take profit at 1.5 times the risk, and then we're going to let the trade run. This is a 1-hour time frame, and as you can see, despite the trade taking some time, eventually it was profitable. Now remember, the aim of this strategy is layered confluence. Don't treat all the 4 POCs as equal. You want to prioritize the ones that line up with structure that you already care about. Things like support, resistances, range highs, range lows, prior swing points, etc. A lower POC sitting on an established support is stronger than a random POC in the middle of nowhere. In summary, the Quadro Volume Profile gives you a cleaner way to read volume as intention plus location. So instead of one blended histogram, you get 4 targeted reads that show where buyers and sellers actually did work relative to current price. You also get to read how dominant that work was, and you also get to read where the fight was actually concentrated. That makes it easier to judge breakouts, spot absorptions, and even understand why ranges hold or fail. Now remember, this is not financial advice. Everything here is for education purposes only. To succeed in trading, you want to build a complete plan around your own risk tolerance, add your price action confluences, and double check your thesis before taking any trades. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.